My name is Miko Matsumura, and I'm a general partner with Gumi Cryptos Capital, which is a blockchain venture fund focused on investing in this space, and also a co-founder with the Evercoin exchange.
Hello, everybody, and welcome to the second edition of REIMAGINE 2020. I'm one of your hosts today, Adam, with my partner, Galen Danziger. Glad to have all of you join us as we have another exciting discussion with Miko Matsumura, a REIMAGINE and fan favorite, and starting to become a regular guest on our program here. In case you missed our first interview with Miko back in May, please visit REIMAGINE 2020, the website, which is ri2020.io, or you can visit the REIMAGINE 2020 YouTube channel where you can watch his amazing, pretty much close to a 2-hour interview on blockchain, crypto, market insights. But without further ado, let me introduce you for those of you that don't know Miko. Miko, welcome back to the show. How you doing today? Nice to see you again.
Yeah, it's great to be here. Thanks so much.
So as I mentioned, if you want to catch Miko's background, you can reference the first interview. But this time around, we're just going to get straight into it. So with that being said, Miko, you've been in Silicon Valley for years. You're part of the open source community. I kind of want to know, when did blockchain make sense for you? When did you come across it, and when did you think it was going to be a difference maker or game changer? It may or may not have, actually. So what are your thoughts when you first came across blockchain crypto back in the day?
Yeah, I was not one of these OGs. Like, I feel like I kept hearing about it and I kept thinking, wow, that's interesting. But it's sort of payments. And I was kind of thinking, well, that's not really my thing, and I actually ran across a Bitcoin checkout at my local cafe, the Coupa Cafe in Palo Alto. And I decided that I was going to try to mine Bitcoins in order to get a cup of tea. So apparently, in today's Bitcoin, it would have been almost a $400 cup of tea. But I kind of had it in my mind that this would be my mission, right? Because I think the first thing when there's new technology, the first thing people really ought to try to do is just play, right? They ought to just try to get in there and get their hands wet. Not necessarily go all in, but just really learn it by playing around. So that's kind of the thing that kind of dawned on me.
What year? What year is this?
This is pretty far along. This is like maybe 2015, 2014, something like that. So
that's when you first heard about Bitcoin?
I heard about it many times before that, but that was the first moment where I was like, okay, I'm going to become a miner, or that was the first time that I actually made any commitment of, intellectual effort or, knowledge, or rolled up my sleeves. I mean, you kind of travel around the internet, like people talk about it. So, it just, I wasn't the most original adopter. Let's put it that way. There's tons of folks came in, way before I did.
Yeah, no, that's cool. I think I heard about it in 2013. I was working at the bank, and I've told the story like a few times, and he was purchasing Bitcoin through his brother-in-law, $100,000 worth back in 2013.
Great.
And I was like, what are you buying? Do you know what you're buying? Is this fraud? I was trying to do some due diligence, and it's kind of interesting that I'm assuming he would have been a holder to put in that much money, hopefully a long-term. That's a lot of money to put in that early.
Amazing.
Right? And so that was kind of my first experience. And then, as you mentioned, it kind of didn't make sense. It was kind of cool. And then everything else started kind of coming out in 2014, 2015, and 2016 started picking up. So you started mining this, and you bought some coffee. And then what kind of led you into going full-fledged?
Yeah, so it was really my co-founder, with Evercoin. So, we've been friends quite a long time. We worked on some companies together, and, he went all in. He's the kind of guy that would he built an entire Bitcoin node from scratch on his own. He just wanted to be like, I wonder what these nodes are like. I wonder what the protocol's like. And he was like, well, the only way I'm really going to understand the protocol is if I build a node. So he built a node, and the node takes in all the messages from the network, and, it participates in consensus. And, so, after he kind of went through that exercise, he was like, oh, this is it. This is really like the next thing. And, for me, he's definitely someone whose word I take on these types of issues. So, I was like, okay, there's probably a lot more to this than I thought.
Exactly. There's so much going on there. That's kind of interesting. And I think a lot of the OGs and a lot of believers built it, right? Like they got their hands on it and tried to do as much as they could. Galen, were you one of those?
I got into it a little bit later, but I remember some of the people who were first looking at it were telling like, oh, just write like a block explorer or a block parser and figure out how this stuff is actually working. And once you spend the time to see how it's really working under the hood, it's really cool. Like it's a couple of sort of basic concepts that are cobbled together in a really clever way, and they did something really cool with it.
Awesome. And Miko, so what are some of the products that are exciting you right now? That you're following closely, personally, maybe not from your whole ecosystem of businesses, but what excites you right now at this moment?
Yeah, I'm very excited about all the developments in DeFi, right? So I'm really kind of I'm following kind of the macro meta platforms in DeFi, obviously like the exchange platforms like Curve and Balancer. Also pretty excited about some of these lending protocols. Obviously Avenomics, Aave 2.0. I had Stani on the Miko Bits show, so he's definitely like an amazing guy ever since ETH Lend, which was his original proposal. That's why his token is called Lend, because he goes all the way back with that stuff. Robert Leshner's Compound Finance, of course, and the really classic ones like Maker. So so I'm really following a lot of the kind of stalwarts. I'm also kind of looking at some of the emerging sort of new products in the space. Obviously, things like Chainlink and Band, and Teller. So a lot of the Oracle type projects, and then kind of Oracle's tied to things like synthetic. So synthetics. Kyle's going to be on my show. Nick from Teller was on my show with Oracles, and then Clayton from UMA is also on my show. So we're definitely kind of looking into, really both the kind of bigger as well as the smaller players in this emerging, DeFi space.
Yeah, no, that's interesting. We have all of those guests as well speaking, so I'm excited to kind of showcase their work. And what about DeFi? So there's a lot of these. So it's funny you bring up ETHLend and Aave, because I went to their meetup like 3 years ago when it was ETHLend, and it was a small group, and I think there was another project there. Blue Zell was like co-hosting, and kind of an interesting space back in end of 2017, beginning of 2018. So a lot of these products, like what's the vision there? Are they tackling the unbanked? There's a lot of products going on, and then there's a lot of crypto touches a lot of aspects of. Is it a currency? There's blockchain. There's distributed ledger technology. What are these projects that we just talked about in the DeFi space? What are they ultimately providing? What's the benefit that they're offering to the masses, I guess, outside of the crypto space? Or right now, is it just kind of growing within crypto, the crypto communities?
Yeah. I would say at the moment, what we're talking about is what I would probably properly characterize as like deep crypto, And so, one of the things I like to describe is, I like to describe this as kind of the beginning of the spinning of the Milky Way galaxy. We're creating kind of a primary velocity of money, right? Because the thing that's so interesting is that like Bitcoin doesn't really spin. Like, Bitcoin is basically Bitcoin, right? The goal of Bitcoin is to stay as kind of Bitcoin as possible, right? So Bitcoin's just going to hang out, right? The thing that's going to happen with Bitcoin is already happening, right? Which is that, if you actually look at the US dollar, the US dollar right now is kind of declining, right?
Yeah.
The other day, someone was asking me, they're like, well, I'm super confused as to why Bitcoin, gold, and stocks can all rise at the same time. Right. And it just kind of amused me because I'm like, well, rise relative to what? Like, what are you measuring those against? Right. And so the thing that's funny is if you have a ruler and the ruler is getting, smaller and smaller, then all the other objects you're measuring it with will appear to be getting bigger and bigger, right? Like it's all relativism, right? So, but Bitcoin itself, like it's not designed or programmed to kind of like do anything other than be Bitcoin, right? And by the way, like Bitcoin is the perfect Bitcoin. So like, I'm not asking Bitcoin to do anything other than be Bitcoin. Like that's great, right? But the thing that's exciting about what's happening in DeFi is that like what's happening is that we're getting a primary velocity of money. Now, here's the thing is if you look at this economic concept called a Keynesian accelerator, right? It's basically really simple, right? Which is that, if you buy a pair of shoes, then the shoemaker needs to buy bread for their kids, and so it goes to the baker, right? And so basically what happens is the same money goes around and around and around, and so that produces kind of economic stimulation, right? So it's very similar, right? It's a very similar thing that's happening in DeFi, which is that you have a bunch of services that are all causing kind of circulation, right? So that's the thing that's really, really interesting, right? So that creates expansion, right? Like if you think about a galaxy, right? In the center of the Milky Way, there's like a black hole, right? And the black hole sucks in things, right? So what keeps everything from getting sucked in is actually like a little centripetal force, right? Which is that the thing is spinning, right? So it spins and it actually expands, right? So if you think about this as spinning, then it'll start to expand. And that's kind of what we're seeing happening in the ether sphere, right? Which is that people are building, Legos, right? And they're all intersecting, they're all interacting, right? But the reality when you talk about like what does this do for like consumers, what's happening to consumers is consumers are getting the benefits through more frequently, they're getting them through CeFi, centralized financial services, right? And so, for example, what happens with CeFi is that, what people have discovered is they've discovered that as long as Ethereum and Bitcoin keep going up, then it pays to create leverage, right? So people are doing borrowing and lending and they're getting leverage, right? But the point being that if everybody starts believing this and doing it, then you're able to generate consistent interest rates, right? So that really, really makes players like Celsius, I'm an advisor there, and others in the CeFi space, able to distribute really, really high yielding accounts, right? And obviously, if you look at that, then the general public is kind of going to look at Bank of America, and they're going to say, well, how much interest do I get there? And it's basically close to zero.
How long can those interest rates maintain? Those nice yields.
Yeah, I would say this, right? Which is that they're all leaning heavily on crypto increasing in value, right? And the reason why they're leaning on that is that the application is really simple, which is who's borrowing, right? So the borrowers are basically people that just want to increase their exposure to the asset. So they just want leverage. They just want double the exposure, triple the exposure, quadruple the exposure, and so they're borrowing crypto in order to get more exposure to crypto, right? So
what's the risk there?
Well, the risk is that if it drops, then they're going to get liquidated, right? So it's so the thing that's really interesting is it's a bit like leaning forward, right? Like the question becomes how far forward can you lean, right? And without any help, if you lean forward too far, what happens is the center of gravity actually goes outside of the base of support. And if you're in that situation, then you fall forward, right? If you're leaning forward, you fall forward, right? That's it, right? So the point being is, this thing, it's possible if this thing could come apart. But the thing that I think is really interesting is that all of this creates a vector, right? Now, people argue about this, right? They argue about like, well, what's the inherent value and like, why would we be doing this? And it feels like Warren Buffett calls it like rat poison squared, but here's what I notice. What I notice is that Warren Buffett is actually dumping Wells Fargo stock and dumping Bank of America stock. And what I also noticed today is that Bank of America's total like market cap is actually smaller than that of Bitcoin. So, I think that there's definitely a shift going on here.
Oh, definitely. I mean, we can see it happening. I come from the bank side, and it's just the last couple years following this space is just accelerated my, the concepts of Web 2.0 and traditional businesses to Web 3.0 and like future models that we don't even know that are not existing yet, right? And we're kind of formulating what this next wave is going to look like. And so, with that being said, is that why the infrastructure stuff on the DeFi? I feel like there's so many derivative exchanges and products and futures and exchanges. Is everybody just there's so much out there and so much market share that there's a lot of these projects, and I'm assuming competition a little bit, right, to bring out the best of the strongest will survive. Is that kind of what's going on as well?
Absolutely. I mean, one of the things that's astonishing about this space is that there's an incredibly sort of ruthless quality to this, and there's absolutely kind of a survival of the fittest thing going on. And I think one of the big dimensions of all of this is that I think that there's actually quite a lot of copy paste going on as well,
Yeah.
and that the environment actually favors kind of mimicry and kind of minor variations and experiments like that. And the thing that's fascinating about like sort of evaluating these tokens and token value is that the token values tend to be the drivers of these liquidity farms and of these kind of like accumulation schemes. And the thing that's really interesting is it's not clear that the token has like a substantial, like governance tokens, probably don't have significant economic value. That I won't say governance tokens do have an intrinsic value in that they have a use, and the use is you can vote on improvement proposals, right?
Yeah.
But like the question becomes, is that people are saying things like the Wi-Fi token, they're comparing it to Bitcoin, and they're saying, well, if you compare it to Bitcoin, it's kind of like at the moment it's 30,000 tokens in total, so it's like $4 Bitcoin, right? So if you compare Wi-Fi to Bitcoin, you should just like buy it because it's so cheap. But but the thing that's really interesting is like, is that really a fair statement?
Yeah, probably not.
Yeah, the governance tokens, I haven't seen anyone get like reasonable value off of it unless they control most of the governance tokens. Like I saw one VC firm decide like, here's the new MakerDAO interest rates, we're setting it. And I think if you have enough of the tokens, you could probably speculate on the decisions you make. But if you don't have like half, I don't know what you do, how you get sort of compensation from that.
Yeah, it's fascinating, right? And I agree with you. I think that one of the things that's really funny about what you're saying, though, is you're saying that the power of these tokens is actually kind of related to the ability to aggregate them. I mean, there's actually now kind of governance token pooling efforts, right? So, a lot of small people can actually pool their tokens, and what will happen is that these big players can actually get and accumulate the use of these tokens, and they can basically pay rewards back to users for essentially giving up their votes, right? So people are buying votes from each other. Like the whole thing is kind of really wacky, and I do feel like it's I think we're kind of one governance disaster away from sort of a debasement of governance tokens. So that part of the system feels pretty rickety. The locked value part of the system feels actually really strong.
Mm-hmm. Absolutely.
And you're talking about the collateral?
Yeah. I'm very happy with how over collateralized these contracts typically are. I'm pretty happy. I mean, obviously, it depends on the protocol, but like most of the base layer protocols are collateralized beautifully. There's a tremendous amount of transparency. Automatic liquidation is really, really powerful as a mechanic for kind of like ensuring that the liquidity stays in the system. And when you see things that kind of implode, right? Like the energy is able to go elsewhere. You know what I mean? It's not like when something like Yam implodes, like, it's a bit like the way that, Andre Kranja described it is he basically said, well, it's just wealth that's transferring hands from the not knowledgeable to the knowledgeable,
Yeah.
right? So if he describes it that way, it's not like destruction of value. The thing that was kind of problematic about ICO is that ICO was about burning ether into US dollars in order to pay kind of for startups, startup
Yeah.
runway. And so the problem was most of the ether was burning out. Whereas I think in this space, most of the ether is actually either being converted into, stable coins,
Yeah.
or
Stay within the ecosystem.
yeah. It's still circulating. It's either circulating or it's locked, right? Which I
Yeah.
think is really exciting. I think the thing that's more questionable about the vector now is the emergence of these kind of highly valued governance tokens. That part to me feels kind of wildly speculative and kind of not grounded, right? Like I feel like earning like, even up to something like 9% yields off of lending is not that's not unreasonable. And it's not unreasonable because we're seeing CeFi people do it. And the way CeFi people do it's really easy is they basically just grab things like USDC and they just loan it out on these super short-term loans that allow, hedge funds to make really big bets, right? So, and they're very short-term bets and they just return the money really quick. And, so
Yeah. I don't want to diverge too much, but what's your thoughts, since we're talking about kind of locked in value, on staking versus lending?
Yeah. That's the thing that's fascinating is that staking definitely competes with lending, right? So the thing that is emergent is this kind of liquidity provision, right? So, so LPs, that's the kind of terminology, an LP can be offering liquidity to a DEX. It could be offering liquidity to a lending pool. It could be offering liquidity. So the thing that's so interesting about this mindset is that it could also be securing some kind of proof of stake network, right? Which is more like traditional staking, right? So the questions then become like, well, what are the appropriate rewards for these kinds of behaviors, and how do these behaviors kind of get incentivized? And today, the thing that's so interesting is that it feels like right now nobody really understands the primary value of these activities other than the fact that they need to be compensated equally, right? So it means, for example, that when Ethereum 2 staking emerges, it's going to have to produce a competitive yield to Aave or to any of these other platforms, right? Otherwise, people won't do it. And so the thing that's really funny about the space now is that the relative value of these things is kind of really being normalized because nobody really understands, whether DEXs are more valuable inherently than lending. Because they're just forced to reward equally because otherwise they can't get any liquidity. Like no one would actually use them. No one would provide liquidity to them if they weren't competitively rewarding.
And most of these DeFi projects, most of them are built on top of Ethereum, right?
Yeah. 99.99%. I mean, you're going to hear a lot of people like maybe gnashing their teeth and telling me I'm wrong, but like, and you may have to bend the rules to describe certain other things as DeFi, but like, it's definitely an Ethereum phenomenon as far as I'm concerned.
And what's your thought there as far as we just talked about projects and products, tokenomics a little bit, and we kind of just blew past a little bit because we've all been in the space for a little while. But what's been going on in the blockchain layer one stuff, the Ethereums, and you have these other, Near and icons of the world and stuff like that. So is Ethereum kind of the best solution at the moment? And are you okay with where ETH is at? I know it has more developers, it has larger foundation, more users, more education, and I'm talking about just on YouTube. You can like look up anything. What's been going on the blockchain front, the protocol front? Are you following that still, or?
Yeah, absolutely. I mean, I think the thing that's so fascinating is really looking hard at kind of, Ethereum and then kind of candidate successors, right? Because obviously, people are clear that if the 1.0 Ethereum isn't going to be the end game, right? So, obviously Vitalik is promoting ETH 2.0, but when you look at the roadmap, it's going to be a while, right? So because it's going to be a while, we kind of have to really look at kind of these alternatives, right? So when you kind of look, one of the places to look is that Reddit did that scalability challenge. So I feel like that's a really cool little guide or handbook to see who all has a horse in this race, right? Because you're really seeing a whole bunch of players come together, and you're seeing some really interesting approaches, right? But you're seeing a lot of buzz around things. Obviously, Polkadot's a big thing that people are buzzing about. Cosmos is another one that people buzz about. The economics are a little different for each of these kinds of layers, but
and you bring those names up because of interoperability, right? For the listeners, right, that are kind of following this discussion, we have a lot of students, we have some beginners, some novice, some experts. But we just touched on Ethereum and kind of its features and scalability and usability, which is spanning across the DeFi space. And now you just touched on a few projects that are more interoperable.
Yeah.
Is that what you mean, right?
Interop is big because you want to kind of bring, the ETH devs over with the least amount of pain, but obviously, people are eyeballing other adjacent protocols, people are looking hard. I mean, one of the reasons why I think Cosmos is pretty interesting is that there are a whole bunch of kind of projects that sort of live and build kind of core DeFi primitives within that ecosystem. I'd say another one that's kind of like a weird CeFi DeFi hybrid is kind of all the Binance stuff. So Binance is obviously investing heavily in building its own sort of pseudo DeFi ecosystem. I would say that other chains that people are kind of eyeballing as potential successors, I feel like there's a lot of talk about Solana, but that people are kind of a little unhappy about, the sort of VC-esque nature of that. I think a lot of the candidates kind of have a bunch of sort of VC coin energy that people may be dissatisfied about. Near protocol, people are giving a lot of time to, so there's a lot of pretty interesting candidates that are kind of rapidly emerging.
So you said that having like VC support was negative right there, if I got you right.
That's right. That's right.
But Ethereum, if you think of the largest one right now, I mean, it took in investments to fund the initial development. Do you think that negatively impacted its growth, or what's different about these new projects?
Well, I mean, like Ethereum had like a Bitcoin ICO, right? So that was kind of the big, big bang for Ethereum. I would say that the thing that's happened is that, what people dislike is they dislike this kind of centralization vibe that comes from like traditional VCs, right? So I think a lot of people, these days, when you look at these decentralized options, they're really like, excuse me, they're a little bit like no VCs. They're really interested in, pushing a narrative like no pre-mine, no VCs. There's a whole bunch of little bullets that people like to brag about these days, to kind of be much more kind of decentralized day one types of projects. That's kind of the prevailing vibe these days.
Yeah, I suppose. Yeah, I've seen a bit more of that. People, maybe they're just tired.
We'll have to edit that part.
Yeah.
All right, looks like you cut out. All good. Yeah, no, interesting. We're kind of just going down this rabbit hole a little bit of talking about products, and now we're talking about blockchains and kind of accelerating, the industry and helping these teams kind of. It seems like Ethereum's the one right now that's kind of leading the way with a lot of the ecosystem resources and stuff like that. Galen, we have you back?
Oh, yeah.
Go ahead. I can edit that part out.
Oh, no. I was just wrapping up. I was saying, yeah, I see people are probably just tired of the investors, tired of scams, just want everything to be on the table. So it makes sense.
Yeah, absolutely. And I think that, people are suspicious of centralization and centralized power grabs. Obviously, centralized exchanges are being criticized. VCs are being criticized. So, and in some cases, rightly so.
And before we move on to kind of another topic, last couple questions is there anything that surprised you over the last, few years, or even as of recent, in the terms of something that was executed? And the flip question to that, is there anything that surprised you the other way that didn't work that maybe you thought was going to work? Because I know we see these projects coming out, and we kind of catch them on the way up, or not on the way up, but just kind of in development, and then boom, they're here. The Ethlins, the Aves, the Uniswaps, which has been around just not that long. And then there was a bunch of other projects that maybe you were following personally that just didn't make it. I don't know if you have any answers to that, but is there any surprises that you're seeing, good and bad?
I'm rarely surprised by things that are not making it, just because venture, experience. So, you look at a lot of projects, and there's a lot of promising projects that just kind of go by the wayside, and for thousands of reasons. So, that's not surprising. The thing that, is surprising when you see something kind of out of the blue, that I think is almost paradigmatic, like that represents this kind of emergence. And I feel like the one that really popped in that context was Wi-Fi. So, that one is so astonishing, right? Because in a way, it's a bit like no smart contract audit, sort of single developer, just this really dazzling show display, right? So I compared, Andre, the developer of Wi-Fi, as kind of like this. He's like a Wild West sheriff, shoots from the hip, and pretty much is like this amazing quick shot, right? It's just basically able to like pretty much get it right every single time, and that's just, it's definitely very next level. And it's kind of an emergent property of this ocean of DeFi, that this kind of world beating talent just kind of comes out of left field.
Yeah, no. I haven't followed that project, to be honest. What, Wi-Fi?
Yeah, YFI. It used to be called iEarn Finance, and now it's called YEarn Finance, and it's the YFI token. Definitely worth following. It's an incredible saga. The guy behind it is obviously a super genius, and that one. I think the thing that we're now seeing is lots of like really interesting kind of degenerated projects, and that kind of stuff is not that surprising. But like meme coins, I think ever since Yam, like you're seeing like a bunch of new projects that kind of fit that mold, Based and Babel and a bunch of these kind of really crazy degenerate coins.
Which kind of leads me now to adoption, really. So we have all these products and projects, and everybody's building out the infrastructure. We have blockchains that have been created now since Bitcoin 2008 and 9, or 9, and then Ethereum in 2014 or so, and now we have all of these other types of networks and platforms. So what are some of that you're seeing, and you can put on your VC hat and your advisor hat, and you're involved in many teams. What are some of the current and types of barriers you're seeing that are kind of either that are stunting, I guess, kind of the next wave of outside of this community that we're all in?
Yeah, absolutely. I would say that, one of the things that is absolutely the case is that we're still very much at the deep infrastructure layer, right? So we're not making the infrastructure particularly easy or appealing to end users. So I think that's currently the thing. It's institutional infrastructure. I think that at the moment we're really, kind of working at the infrastructure layer and not so much at the user layer. So I think in terms of mass adoption, that's going to be a significant barrier, to this is really just figuring out how normal humans like get the most value.
And I guess adoption can mean a few things, right? Like, which I should clarify. There's kind of retail adoption, the unbanked, the frontier markets of the world. There's adoption of everyday kind of usage, such as payments, buying coffee, like you mentioned before, someone buying pizza with Bitcoin, Laszlo, I forget his name, back in the day.
Yeah, Laszlo.
And then there's adoption, kind of at the enterprise level, that the Walmarts of the world, the Nestle's, the Anheuser Busches of the world, and Boeing's, everybody, right? So like, where are we outside of, I guess maybe frontier markets? It seems like everybody's dipping their toe in the water and obviously are somewhat believers, and now it's just kind of use cases and, getting beyond the POCs and pilots, would you say?
Well, I would say this is that like personally, I still remain a little bit skeptical about many of the enterprise use cases. I think that enterprises largely exist as a function of trust and kind of trust in their brand, and so they're really and centralization is super powerful and awesome. Like pretty much if you kind of look around any environment, like you're really going to see a lot of the benefits of centralizing things, and so a lot of the things, everything that you're looking at that's kind of like beneficial is, to the large extent, produced through the power of centralization. So I would say that like, decentralization is powerful when we reach the limits, right? And so I call this period of history, maybe starting from 2008, as what I call peak centralization, right? Which is we just suddenly realized that like,
Yeah.
if you continue to aggregate more and more and more and more and more power into centralized authorities, at some point it just breaks down, right? And that's where we've reached. We reached the point where people can't trust centralized authority anymore because it's too powerful. Like it's too big to fail. And what happens is that banks are too big to fail, and then the banks begin to manipulate governments, right? And so, like in California, people are pretty mad because the electric company is doing this kind of rolling blackouts, and what it turns out that they spent their money on lobbying, and they didn't spend their money on upgrading the infrastructure, right? So they're just playing politics, and they're just trying to make as much money as they can. And it turns out that they spent their budget on, bonuses and high salaries for their executives, and not on upgrading their infrastructure. So it turns out the infrastructure is just like really falling apart, right? So, when you see things like that, you start to realize that like, if you concentrate too much power in too few hands, then you end up with kind of malfeasance, and you end up with a lot of corruption, and you end up with a big mess. So I think, the thing that's interesting about decentralization is that it's hard, right? Like it's hard to do, right? Otherwise we would have done it a long time ago, and so I think right now, that's where the game has gone, is people are starting to loft up these DAOs, and they're starting to loft up these kind of novel constructs, but I can't, enterprises are not really going to be, I think enterprises will be beneficiaries of open source financial infrastructure, but I don't think, I think banks are going to use blockchain based payment rails, but I think that they're not going to be the first adopters.
They've been trying, I think, for like the last 6 years or so. And they're still trying to figure out the use case for a lot of their internal vendors, so, how they're going to use it, which is kind of interesting. We've had plenty of discussions, and even like the power company you're talking about, we'd offered to work with them in some capacity because they have a blockchain internal initiative going, and I thought that was interesting, and we had reached out to kind of deepen that relationship and talk to them about implementing this stuff and figuring out the best way possible, but leveraging what we have, which is the universities, and then we have our Blockchain Education Alliance, which is 20 plus, blockchain partners and all the ones we're talking about. And so going back to adoption as well, like even on the institutional side, we just talked about the enterprise, and they're kind of figuring it out. And like you mentioned, is there a use case for them? Like, we're not sure. It's a glorified, central, permission like database. And going back to the institutions of the investment side, and kind of touching on topic there of this type of adoption, whether you're managing family offices and all that, what kind of trends are you seeing on that front as far as the traditional hedge funds, the traditional money managers and family offices? Are you seeing kind of any kind of increase of interest in the
Oh
crypto space?
yeah, Bitcoin is the thing. Bitcoin is really popping because really the thing that I think is the killer application for kind of family office is really kind of wealth preservation and transfer, right? So, the thing that's so fascinating is that everybody's kind of skittish in this macro, and this thing has been called the TINA economy, right? Which is there. It stands for there is no alternative.
Yeah,
Right. Well, it turns out there is an alternative, right?
there
It
is.
turns out that Bitcoin is an alternative, right? So people are looking at alternative asset classes right now, and you could argue that they're looking at it like there's no tomorrow, but there is a tomorrow, and we have to kind of prepare for whatever that tomorrow may be.
So you're seeing a lot more interest in there. And how much are they? They're just researching. I
No,
know.
no, no. People are going in. People are going in. It's not just research. People are getting very serious about this. And you're seeing a lot of these, folks like David Tudor Jones and similar who are kind of flipping. They're kind of moving from like no coiner into Bitcoiner. And I think it's because of this macro. I think one of the things that they're realizing is that there's a generational thesis, right? That boomers like gold, but like there's a whole new class of people coming up that are kind of mistrustful of all of that. And in a sense gold has a feeling of being sort of tainted and owned by the older generation, and they're not really all that interested in like holding having it or holding it, or there's no feeling of legacy, whereas people feel like this digital age is kind of the new way to go, and the internet.
You bring some good points up, and another thing to touch on really is the no coiners to Bitcoin to VC to altcoins. How do you kind of see that portfolio construction of how much to go into Bitcoin, how much to go into altcoins, or how much to invest in the underlying product or project like these DeFi projects?
Yeah, it feels like this, right? From an asset allocation perspective, for me, I would probably encourage kind of large entities, like very large entities, sovereign wealth, or even just single family office, right? Is to look at something like the entire cryptographic asset space as being maybe a 2% hedge. And similar to kind of gold, right? So look at it that way. But once you get inside of that bucket, like maybe what you should do is think about it as something like 50% Bitcoin, right? Because if you look at Bitcoin dominance,
Yeah,
it's kind of hovering a little below 60% Bitcoin dominance, but
yeah,
it feels like Bitcoin dominance's organic state is going to end up being almost 50% as soon as we're through with this kind of like alt season. Right. So to me, I would look at it as like, why don't you kind of prematurely adjust that down to 50% Bitcoin, maybe 40% Ether, and then look at like 10% into alts, and to me, like alts, if you're looking at alts, like you're probably gonna, it's at that point, it's kind of gets to the point where you kind of want to maybe hire a manager, or you want to get, because I feel like if you're just kind of diversifying into this, it doesn't feel like you're going to be able to do meaningfully well, like picking on these things.
yeah. I mean, those things, you got to really watch them if you're, especially if you're trading them. I mean, I guess if you follow the project, which could be early stage, and like you said, you do need a team on it if you're going to diversify it, that much.
Yeah,
Um,
it's a full-time job for sure.
and how are you seeing some of this? I wouldn't say hesitation. We just talked about a lot of the institutional side, jumping into crypto. From your perspective, I know you've had some previous relationships with nations, sovereign states, and stuff like that. What are you seeing on the regulation side and the compliance side that's giving a boost to crypto maybe in general, or maybe it's not giving a boost
No,
with
I
some.
would say probably the biggest kind of bellwether for the space is kind of this central bank digital currency CBDC project. So, whether it be the digital payments project in China with People's Bank of China, or any of these other kind of like emerging central bank digital assets. Like, I think that's the kind of next wave of adoption. And, one of the things that happens when central banks kind of push into the space is that they really kind of like have to restructure a lot of the regulation in order to accommodate these instruments. So,
And
I think
and
that,
what is that digital, fiat, of a sovereign nation? Aren't we digital now? Like what's the benefit to the country or the sovereign nation state? And then how does that correlate to crypto and Bitcoin?
yeah. So central banks are almost, are by their nature, they pretty much just interface with banks, right? So basically, what the benefit of having such a system is that it's a much more instantaneous and deterministic accounting system, right? So, for example, if you look at what China is doing, with their digital payment system, is they're actually not even doing central bank to regional bank. The People's Bank of China, which is the largest central bank in the world, is actually kind of pushing from central bank to central bank. So they're trying to be almost like a meta central bank. And what they're doing with their Belt and Road Initiative is they're basically connecting central banks of other countries, and they're kind of trying to upend the US dollar as kind of like the central bank reserve currency, and obviously reserve currencies now at central banks are baskets, right? So I think that this digital, renminbi, this digital payment system is actually just going to be a way of doing payment reconciliation. But if you look at how it's tied to the Belt and Road Initiative, basically what China is doing mostly in Africa is it's doing what the US did in Latin America, right? Which is just basically creating these kind of like debt-based systems in order to invest in the infrastructure. But the thing that's fascinating about how that works with digital payments is that you then end up with like a much, much better kind of reconciliation system. So, I think that's what, Beijing is looking for is a lot more transparency, accountability, control, and, lower cost, faster reconciliation of these debt relationships.
Is this something that Ripple is trying to take part of, or this digital fiat, this digital sovereign, currency would be homegrown through the government?
Yeah, generally speaking, the biggest governments are home growing simply because they have the prowess, they have the economies, they have the technologies, they have the talent. I think that Ripple would probably be more likely to be pushed by, smaller countries, but I think that even Ripple may not be the right, technology base for this type of project. But we'll see how it shakes out. Ripple is there's definitely great people working there, some friends and things. But I think the jury is out as to whether we're going to see Ripple-based central banking products as yet.
And what are the effects of this digital fiat with the relation to Bitcoin? Would it be an easier on ramp to get into some of these DeFi would it be an on-ramp, boost to
I
some of these?
think that it's not. I think the benefit is less kind of technological and it's more psychological, right? Which is that I think once you have blockchain adoption at the deepest levels of, the world governments, then it kind of equalizes these things psychologically, right? And you end up with kind of this open source money, right? And so for me, that's kind of long been my kind of investment thesis around the whole space is that, open source is kind of like the rebel alliance. It's sort of like anyone who's kind of disenfranchised from the current financial system is going to like lean into this open source financial system, and I think that the thing that's interesting about the current system is that it managed to disenfranchise a pretty large number of people.
Yeah, no, totally. And I know we only got a few minutes here.
Sure.
And so what's the future look like in the sense of fiat and crypto then? Is it crypto going to take over? Maybe not.
So here's my take.
Is it just going to be another option for like you said, the disenfranchised individuals with some bleed into kind of the masses? What does that kind of look like for crypto and fiat together?
Yeah. So the way I see it is I see this as being kind of an open monetary platform. So you look at crypto and it's very much kind of open source, it's consent based, and so it's kind of, these are all kind of internet monies, right? And the thing that's interesting about open source is that open source is just a way of lowering the cost of transactions and lowering the cost of infrastructure. So the thing that's really interesting about the eventual steady state of this thing is that nobody will be able to resist, but it's not going to wipe anyone out either, right? Because if you look at the software industry, the most valued companies in the world, other than like Saudi Aramco, are companies like Apple and Facebook and Google, and they're all getting and Microsoft, they're all getting incredible benefits from open source, right? And so, I don't think there's going to be a country in the world that won't be getting an economic benefit from this layer of like transaction processing that's essentially offered for, at a very low price, right? So I feel like, low cost infrastructure is going to benefit everyone, but if you look at this model, the software companies that are proprietary are actually worth more than they've ever been worth, right? So the point being that I think fiat currencies will be worth more than they've ever been worth, but I think that the base layer is going to be, moving into this open source cryptographic asset layer on blockchain.
Wow, it's a lot to absorb there. I feel like with the stimulus packages and everything being deployed as far as capital goes, and we keep talking about 5G everywhere, and kind of again these markets, right, having internet access, and it should be booming, especially kind of like in Africa. What's kind of they've been advanced for quite some time. Where do you think kind of the next where do you think crypto is going to penetrate next, I guess, in some of these developing worlds?
We're definitely tracking South Asia, Southeast Asia. We're tracking, Latin America. We're tracking Africa, so, across our venture fund. And, a lot of the kind of ultra high growth that we're seeing there is sort of a leapfrogging effect, but also the kind of debasement of regional fiat currencies, right? So you're seeing a lot of countries like Zimbabwe or Argentina or Venezuela, where the local currencies have experienced kind of radical hyperinflation and debasement, and because of that, there's quite a bit of adoption that's kind of happening. So, I think that there are, a couple hundred countries in the world, but there aren't even a couple hundred legitimate fiat currencies in the world, and the average fiat currency lives for a lot less than 300 years. So, I think that's really what we're seeing.
And we're kind of pushing that 300-year limit, coming soon.
Yeah, that's right.
All right. Well, I think we're wrapping it up here. Galen, do you have any last-minute thoughts that you want to share?
I think that's pretty good for me. Thanks very much for your time, Miko.
Absolutely. Really enjoyed it. Thanks, Galen.
Miko, where can our guests find you?
Yeah, I'm easy to find. Miko.com, Miko.com. My YouTube channel is Miko Bits. It's Miko.com/bits. So you can go there. And you can also find me on Twitter at Miko Bits. So that's easy.
Perfect. Well, for all of our guests out there, this is Miko Matsumura, and it's been a pleasure speaking with him for the second time around. We appreciate you taking time out of your day, Miko, and joining us here. We plan to do this actually every month, for the remainder of the year, due to the fact that everybody's at home and schools are, somewhat in session remotely. And so we're trying to take advantage of this to bring as much great content from industry leaders and thought leaders like yourself. So again, thank you for joining us, and we hope to have you back.
Thanks so much, Adam, and thank you, Galen.